Okay, good afternoon, everyone. Adrian, the creator of the Expert Manual Backtester, is here with us, and probably after about an hour into it, maybe 45 minutes or so, we'll open it up to questions, and Adrian can answer any specific questions that you have on the software. Before we get started, let me go ahead and do the disclaimer here. Obviously, trading is an incredibly difficult business. It's way more difficult than most people think it is. And I would say, well, every single person that I've ever talked to that is successful at trading, they have all at least blown one account. So just bear that in mind. Don't trade with money you cannot afford to lose. And just count on it taking a lot longer than you think it's going to take, because you are competing against the greatest minds in the world. All right, so the main thing in proving out any trading system is to test it properly. Problem is, most people don't know how to test it properly. Unfortunately, most of us get into this business because we've watched somebody's, incredibly excellent marketing webinar or whatnot, or we've signed up for some, free trial of somebody's trading system or whatnot, and then we get kind of talked into buying it. And we don't really understand when we're beginners that in order to prove something out, you have to, well, number one, you have to be able to measure it, but you have to be able to at least do some level of back testing. Obviously, most of us don't know how to program, so we can't program out our trading system. That is, if it's a mechanical system. So what we're relegated to do is to back test, to do manual back testing. And that's essentially what I had to do for a couple of years. Well, I'd been doing it for several years, but it took over a year to prove out the system that I'm currently working with. And to do that is an incredibly difficult, it's a tedious and time-consuming process, not necessarily difficult. But of course, you have to have, first of all, a set of rules to backtest. And even if you are discretionarily trading, you still have to have some level, some set of rules that you can measure your performance by. For instance, if we're talking about manual backtesting, probably the most common type of trading methodology that comes to mind would be trading with Elliott wave. And that is obviously very subjective. And you do have a set of rules that you would have to trade with, but in order to program those type of rules, good luck. It's just about impossible. Not impossible, because I'm sure some people have done it, and there are there used to be a pretty high level piece of software that could at least automate some Elliott wave signals properly. But in order to be able to backtest something like that properly, you would have to have at least some basic set of rules that you could test. Okay, so unless you have fully mechanical rules, then you can't really program that, your trading methodology into a system that you could then backtest. So in order to prove out, I would say most of what most of us are working with, retaining some level of discretion, we have to do this stuff manually. Okay, so either you do it and you have the potential to go on, improve your skill, and make money trading, or you don't do it and you may as well just donate your money to charity because you're going to lose it. It's really that serious. And if I know a lot of you here, a lot of us, a lot of you guys that show up and do these training sessions with us, a lot of you have been doing this for a while, so you know exactly what I'm talking about when saying this is just an incredibly difficult endeavor. And there's a right way and a wrong way to do things. And if you're not proving out what you're working with, then it's going to be pretty much impossible for you to make money. So all of that to say that I found this tool that makes manual back testing so much easier. I know this is a little bit of a repeat for some of you that were here last week, but for those of you that, you know, you're brand new to this, we're talking about this expert manual back tester, which allows us to do this type of manual back testing quite a bit more efficiently, more quickly, and it also gives us a lot better statistics than Ninja's manager strategy analyzer would give us. Okay, so we have some better statistics, and it also splits up our trades into the proper, you know, position 1, position 2, whereas with NinjaTrader's strategy analyzer, or, you know, even their what do you call it? The account performance tab. They don't split up the trades properly. So for instance, if I'm taking a multiple contract trade, I'm, you know, getting into 3 contracts and then scaling out with 2 off at the first position, 2 off at the first target, the last one off at the third target, or the second target rather. Ninja will not split those up into the proper, it just doesn't do them properly. It treats each and every single contract as a separate trade. Okay, so this does group the trades together and give you the proper metrics. So it's a pretty incredible tool. And what we had started with last week was to put together a slim set of rules here, and then proceed to walk forward bar by bar with 4 different charts. So we are using a multiple time frame system in crude oil, and then marking up where we had these set of rules come together. Okay, so just to give you a little bit of background on the way that we trade in the trading room, typically we're looking for the larger corrections and trying to catch the larger moves. And what I've been looking at doing is trying to take part in some of these smaller corrections. For instance, something like this on the 5-minute chart, where it's only about maybe an hour, hour and a half correction, or even less. Okay, so I put together this set of rules to be able to test out using less charts and looking for some of these smaller corrections. Okay, so I'm still looking for identifying corrections, but allowing much smaller corrections. All right, so I put together this set of rules, and we'll go over them here quickly. I'm using just the crude oil. We're just going to mark up crude oil and trading only 5:30 to 11 a.m. using 4 charts, a 1500 tick. It's just a random number. It's nothing special about this. Basically, what I was wanting to do was create something similar to the number of bars that you would get during the day session with a 5-minute chart. So 1500 tick is, for all intents and purposes, fairly similar to a 5-minute chart. Okay, and then the 300 tick is pretty close to a 1-minute, a little bit faster. So I wanted something a little bit faster than a 1-minute chart. So a 1-minute, a 5-minute, 1500 tick, and a 300 tick, and that's for identifying and trading with these little smaller corrections. So if we're in a pretty strong trend up, then I'm looking for the ends of these little corrections back down, and not worrying about everything lining up on a 20-minute, an hourly, or even a 240 minutes. So we're just focusing on these little small pullbacks here. And I'm requiring at least one area sloping in favor of the trade, making confluence with at least one other area. When I'm talking about areas, I'm talking about market geometry. So for instance, right here, Well, we came through that low pretty good there. Let me just make an easy example here. I guess this would be about the most obvious one here. So when I'm talking about a confluence of areas in the market geometry, I'm talking about trend channels and median lines. And this is about the best way to identify support and resistance that I've found that I can actually test and prove out. So when it comes to determining future areas of support and resistance, market geometry is about the best thing that you're going to find. And then we're confirming those areas using volume, but using relative volume. Okay, so what we're doing with a relative volume is identifying when we have a large amount of volume relative to the average volume for that time period. So if we're looking at this bar right here, it closes at 1225. So that's a 5-minute bar from 1220 to 1225, and it has 937% relative volume. So that means it's 9 times more volume than we typically have for that 1220 to 1225 bar. Okay, so with the relative volume, you can see a little fatter plot behind that. That's looking at the relative volume per range, the density of the bar. So with this relative volume and relative density, we're able to analyze the volume much more precisely, which gives us an idea when these areas are being confirmed. So for instance, we've got 937% more volume than usual. And it's also incredibly high volume per range. That's telling me that there is a ton of demand coming in off of that area. Okay, so that's what the volume and the relative volume is for. And then also we're wanting to confirm those areas using momentum divergence. And that is waiting for price to slow down into the area. Okay. So for instance, with the rules that we're using today, this trade would not be allowed because it's so strong to the downside. Yeah, it's right into a perfect area and it reverses right out of it, but it's so strong to the downside. There's no bullish divergence on any chart. And it would be for the purposes of this back test, it would be counter trend. So we would not be allowed to take this one. Okay, but this would be, the perfect setup on the hourly chart or the 20-minute chart. Okay, so we're just looking for the smaller pullbacks on the 5-minute, the 1-minute chart, and trading with the trend. The areas that I'm talking about are the market geometry, the trend lines, the trend channels, the median lines. And then again, we're confirming those areas with the relative volume. Also something called volume per second, which is self-explanatory, but it's looking at how fast those contracts are coming in. And at a lot of turning points, we see incredibly high volume per second. Like right here, we have 261 contracts per second coming in at that low. And at the previous low, we had 166. Okay, so we see very high volume per second at turning points, and that's typically indicative of a lot of market orders coming in very quickly. All right, so that's just a basic overview. It would take several hours to fully explain what it is that we're doing here, but for the sake of this, let's get on with it. Also, volume divergence would be a confirming signal. I'll show you one of those when it happens. These are just a couple of other kind of more specific rules as far as identifying a correction. So if it's only about a 30-minute, or let's say between a 30-minute and an hour and a half long correction, so for an hour, that would be 12 5-minute bars. 12 5-minute bars. And there's no divergence on the 2-minute. This should be 1 minute. or 300 tick chart, then I'm not requiring divergence. Okay, so if it's a very short, fast correction, no divergence is required. But if it's a much larger correction, then I am requiring that there be at least divergence on the 1 minute and or the 300 tick. Okay. Obviously, if it's a very short, small correction, you don't really have enough bars for there to be divergence. You would have to use a much, much faster chart to try and confirm that the price action is indeed slowing down into that area. But for the sake of a much larger correction that takes up a larger number of bars, then I would require that there be momentum divergence into that low for a long or into that high for a short. My stop placement will be right behind the area that I'm entering from, and my first target will be taken off at 3.5 times what I'm risking. So if I'm risking 8 ticks, or let's say if I'm risking 10 ticks, my first target would be at 35 ticks profit. Okay, and then the second target is going to be taken off at the next obvious area defined by the market geometry or on a break of the previous major swing high or low. I'm not going to trade after 9 a.m. on Wednesday. And if I'm in a trade before 9 on a Wednesday, Wednesday is the crude oil report, then I would exit before 9:20. The report is at 9:30 my time. And those are May 3rd, May 10th, and May 17th today, every Wednesday. So trade only what appear to be corrections on any of the charts that I'm trading, right? The 5 minute, the 1500 tick, the 1 minute, the 300 tick, and no more than 3 trades per day. That's kind of that's one of the major things that gets people into trouble is over trading and manufacturing trades. So for this example, we'll limit that to no more than 3 trades per day. All right, so we had started this last week, and let's see where we ended. Let me see. Okay, right in here. So what I'm able to do with this tool, this is really pretty cool. We can actually do, as I'm going bar by bar with this, I could actually be running multiple back tests. I could have 5, 6, 7, 8, 9, 10 different things that I'm testing, and then just simply switch from one to the next. And then there's my other one. Okay, and then I can go back to this one. Do I want to save this back test before opening the old? Yes. And then there is the old one. So this is the one that we had started on, what was it, last Wednesday or last Thursday we did that. Okay, so remember my rules are can only trade from 5:30 to 11. So let me open up the trade statistics, which is this button right here. And let me double check that I have followed those rules. And no, I have not. I have one that I took at 4 a.m. So what I can do is I can delete that. It was a bad trade, shouldn't have been allowed. I'm going to delete it. Get that out of there. I'm going to delete this one too. And then we'll start with this area. And this one was at 3:30, so let me delete that. And now I think we're good. So 7, 6, 5:45, 8:30. Okay, good. And then I click OK. And those two have been deleted. So now the last trade that we see was right here. All All right, so what I'm using to scroll bar by bar, obviously with Ninja, this is pretty difficult to do because of the way that they have their global crosshairs. So if I turn that global crosshair on and turn this little chart seeing tool that I have off, you can see that it's kind of difficult to get these charts to line up properly. And for some reason, Ninja's crosshairs are just dreadful. You see how they flash all the time? We're actually remaking these crosshairs now, but it'll be available in this toolbar. But what we have to make this a lot easier is this toolbar, chart sync function here. So when I click on that and then click on a chart, then they link up properly. And then I can now scroll bar by bar, and it makes doing this type of backtesting just so much easier. And then if I identify, the swing high, let's say I want to just grab onto that and center all of the charts at that area, then I can do that as well. So, whoops, pretty nice. Anyway, what we want to do is disconnect from the data, first of all. And I guess let me do something just to show you that these methods are actually pretty incredible. And I did a manual back test. Sorry, I did a sim track record a while ago. I'm not going to show you those results because they're too incredible, really. But I'll go ahead and show you my live results from the past month anyway. I started with a $5,000 account. And let's see, I guess it was November. I actually got it up to 18,000, but then I just made a series of mistakes. It had nothing to do with my methodology at all. It had to do with me just simply making mistakes and adding to losing positions, which, that's something I swore I would never do again. That's kind of what got me into the trouble that I was in when I first started trading about 10 years ago. But anyhow, for some reason, I allowed that to happen and got myself down to about 14,000. And anyhow, since then, over the past month, I've been able to get back to 17, it looks like. 17 as of yesterday. And then today I made, what does today say, the 17th? Today I made 521, which says 561 in my main account. That's weird, huh? So it's evidently it's up to 17.7. So I'm pretty much right back to my high water mark. Okay. So that's trading a set of rules that are a little bit more. I require a little bit more, and I'm looking at larger areas. I'm kind of avoiding some of these smaller retracements. But after seeing this day after day after day and seeing that, even these little smaller corrections line up really well with the market geometry and they get confirmed really well with the volume, I've been wanting to prove this little system out. And of course, I can't fully program out all of those rules to do, a manual, an automated backtest. So I have to do this type of manual backtesting. So this is something I have to do anyway. And it's something I've been wanting to do. So I figured, well, since I'm going to be doing it and I'm going to be using this tool to do it, I may as well show you guys as well. And then, let you guys get at least a small discount on this so you can begin to do this type of analysis yourself as well, which is really pivotal. I mean, you have to do this stuff to make any sort of progress. And the more you do it, the better you become at pattern recognition. And that's really what trading is all about, pattern recognition. All right, so we said we would start at 5:30. Sorry, I'm just refreshing the charts so that I don't see all of the drawing objects and the divergent signals and all that stuff. And evidently, I think I have a little bit too many bars back on the 1 minute chart. So just bear with me for a second. Okay. Yeah, my pleasure, Bill. I mean, I've got to do this stuff anyway, and this is a pretty awesome little tool. So, and Adrian's actually going to be updating this to make it even more useful for this exact type of, going bar by bar, but then trying to exit that final target after you've marked up the charts and then scrolled forward. So he's going to add a little bit more functionality to it, which will potentially be ready by the time that we do our full release on, all the updates we've been working on, which should be June 22nd. So by then it'll be even better. I'll let him talk about that a little bit when we get into taking some questions. So anyway, all right, let's start marking this up. Let me delete everything. Obviously, we've put in an incredibly strong low here, and we've turned up in 5 waves, or yeah, it's 5 waves. And we're starting to come back down, right? So we do have lower lows and highs directly in front of us on this 5-minute chart. And what do we have here? We're right back into a trend line. And that's really, I'm not requiring much more than that to get into a trade. I'm saying 2 areas, right? That's all I'm requiring. 2 areas. And let me just mark up what I would normally mark up here. Yeah, you've pretty much also got a kind of a kiss goodbye. So I'm just connecting from 1 to 5 to the end of it, the ultimate high, which is there. And it's automatically finding this low. So this was obviously the area that we found support, where we get that huge extreme relative volume bar. It's an extreme churn bar, meaning very high volume per range, obvious sign of demand coming in. We come back into the channel that we've just broken out of, come back down, and now we come back into it one more time, this time, however, hitting this downsloping channel line. So let's see if we have anything else. You could count that as an area, but I don't think that I would. We're basically not using any other part of that channel. But you've kind of broken out of this lower median line and pulled back to it, but I wouldn't really include that. Let's see what we have on any of the other charts here. Obviously the same trend line, I imagine. And no, nothing there. Let's see. Well, this looks a little bit better as far as a kiss goodbye line from the trend channel. Maybe it's looking even better from here. Yeah, it doesn't really matter. This is the highest high, so let's use that one. Okay, and then we'll look at the 1 minute and the 300 tick. So remember, all I'm doing is requiring volume divergence, a high density climax bar on the 1 minute, or a churn bar on any of the charts. And then preferably some high volume per second on one of the tick charts, and we definitely have that here. Let me refresh this chart. So here we have a pretty strong buying climax, but it's also a very high density, meaning that it's high volume per range. So we've, even though that is a massive buying climax, we've obviously hit some resistance. Otherwise, the sheer amount of volume there would have driven the bar much, much higher. Would have been much more of a wide-ranging bar than it even is. So we've clearly hit some resistance on that bar. So we basically don't really have any other areas. Maybe we have an upsloping median line. Whoops. Upsloping median line here. Nope. Not even. But we do have enough for the short, and then this is a buying climax with high density. So that's really all we need. And then we have the very high volume per second there. And that's all we need. So here. So what we do before we get into the trade, we want to figure out, okay, where is the most likely spot where we would want to get out of this trade if it were to go in our favor? Where's it likely to get down to? So we have a couple of different options here. I would say this median line would be the first spot. And that's also on a break of this low. So that would be the most obvious spot. And then also, we found support on this median line once before. So I would say if we make it back down to that, or even to the bottom of this channel, we want to be out of this thing for sure. Okay, so I'll go ahead and enter here. And then take the second target. Remember the first, I don't know if I went over this, but the first target is going to come off at 3.5 times what we're risking. So my stop is simply going to be behind this kiss goodbye line. So it's looking like probably about an 8 tick stop. And then 3.5 times 8 will be the first target. And then my second target will be basically a break of that previous low. Okay. The stop will move to break even after the first target is hit. So after we take off our first target with 3.5 times what we're risking, 3.5 R is what we're risking on the trade, then that stop loss will go to break even, and then we're looking for the second target. Okay, so all I have to do is click on tool, and it says choose the entry location. We'll say right here on the line, even though it came through it a little bit. The close of the 1 minute bar is at 37, so I'll go into a little bit lower. And then the stop location will be just behind that, behind this high as well. And the first target is coming off right here. And really the second target is going to be just a little bit below that. We'll say like right here. Okay, so that trade is logged. So let's scroll forward and see if we got stopped or filled. Oof. It's right back into the same area. And then you get a churn bar showing that supply came in at that same area again. So that's a good sign, obviously. And then there is my fill there. So after that bar closes and we scroll past it, then the log trade will show up. So that's my entry, magenta line, stop loss, and I think it's orange, red, and then these lines are lime green. Okay, so that trade was logged. It's now, what, about 7:45. So I'll take potentially 2 more trades, but let's see what happens here. So let's see if we have anything line up. Obviously, I'm not going to try to trade long since we're going straight down right now. I'll have to see a break of the previous high before looking for a long. Okay, what is this? It's 5 minutes before the ES open. Okay, it's finding resistance right here on this original channel line. All right, so let's see if we can pull back. Yeah, right here. Okay, so we pulled back to this downtrend channel that we've broken up and out of now. We're pulling back to that. That's the the quintessential kiss goodbye. We're coming, straight down. We've got a downtrend channel, then we break up and out of it and pull back to it. So let's delete all of this. All right, there we go. So really all I need now is a churn bar, preferably some high volume per second, and another area that is going to make a confluence with that down sloping trend line on the 5 minute that we pulled back to here. I would allow this, but that's pretty ugly looking, so let's see. But I would normally allow that anyway. Not looking so hot as far as another area is concerned. Okay, we do have the median line here, and clearly the upper median line was used at this high. So that's valid there. I don't think we have anything else as far as an uptrend line or anything. And potentially we kind of came through that a little bit though. No, this median line is much further down. All right, so let's see what happens. See if we get a churn bar or anything. There is our selling climax, which is incredibly high density. Okay, now this is looking much better. It's not quite showing up here. Let's see. This is actually looking much better because it's actually come back into this median line here. This median line here. So we've got a cross section of median lines, and we've hit the downsloping baseline on the 5 minute. Okay, and now we actually have a churn bar on the 1500 tick right here. It's also a major spike in volume, which is what that white dot is. And we have very high volume per second, extreme volume per second there. We're back to the VWAP actually, the session VWAP, volume weighted average price. And then we have our churn bar right here. So that bar is, well, let's just say we got a bad fill and got in at the close of this 1 minute bar. Really all I want to do is I don't even want to try to make it past that swing high. Let's just try to trade back to, since we use this median line here, and that was created from this channel from high to high, we'll trade back to that upper median line there, 50, which is essentially the same price as this. So that's 50. And then our stop will literally be just one tick below that low. So that was at about 51 or 2. So we were getting in at 24 here. And then our stop is just below this low. And then we're going to get out at like 51. So let's see if that works. Trade logged. I'm thinking we got stopped on this one. Not sure what happened there. $46.10. What was the low? 13 ticks. 46.65. Oh, because target 1 hasn't been hit yet. Okay. Yeah, so my stop was a little bit too big. It was so big that that 3.5 R that I was looking for the first target was beyond the area that I was looking to trade to. So let's see if we actually go up and hit 65. There we go. Okay. Well, I lucked out on that one. I should have been stopped out here. Should have been stopped out because where I was getting in, remember, was at the close of this 1 minute bar. And then I was putting in my stop behind that low. So really, I should have been stopped out on that. I'm not going to worry about trying to go back and change that. But if I wanted to log this properly, then I would need to go back, open up the statistics window, delete this one, and then scroll back. I wouldn't even need to scroll back. I could just click on it. Let me just go ahead and do that. It's not going to take me 2 seconds here. And let's be fair and log this one properly, because that's the problem with manual backtesting. Most people will kind of explain away why they wouldn't have taken a trade that ended up being a loser, and then try to kind of, manufacture a reason to get into a move that is going to happen with, hindsight, when there really isn't a reason to be getting into that trade. So let's see, I had 24, I think, right in here, and then I would have been stopped out right there. Yeah, and I took a full stop on that. Okay, perfect. All right, so let's keep going. Let's go to the next day. Let me see if there are any questions. Adrian is saying, even if you would have been able to program this out, taking into consideration the complex nature of your system, it would be a good idea to prove the strategy in the manual backtesting way before investing the thousands of dollars into programming to find out that it might not be as profitable as you thought. Yeah, exactly. Exactly. Even programming something out in Bloodhound, even though it's way, way faster, it's still time consuming. And with this tool, you can at least begin to prove out whether what you're working with has the potential to make money or not. And then if it does, then you can move on to Bloodhound or paying a programmer or whatnot. If you want to completely mechanize, let's go on to the next day here, 5/9. Let me delete all of this. Jordy's asking, why am I moving my stop to break even? It's just something I wanted to test, and it's something this tool can do. So I'm simply moving the stop to break even after locking in that first target. It's just one of the things I wanted to test, and I can test it with this, so I figured I may as well. All right, any second here. So I'm starting at 5:30. Right there is where I'm starting. Okay, so let's see here. Samir is asking, does moving stop to break even work only with dynamic? And Adrian is saying, no, it works in the static mode as well. Yeah, so the dynamic mode allows me to control more fully where I want to place my targets and stops. The static mode is for fixed profit targets and stop losses. If I didn't fully explain that, Adrian, you can come on and do that when we get done here. So I'm just going to do one more day, and then I'll have Adrian come on and we'll answer some questions. And after that, I'll continue on until today, until May 17th, until we get to the end of data for crude oil. So let's see, I'm just going to mark this up. So we see the reason for the resistance here. It's looking like an ABC down, ABC back up to me. This is a Schiff median line. And that seems to be giving us our high here, our low here, and what is potentially a retracement low. This is looking like A, B, 5 waves down for C. A, B, 5 waves up for C. And now we're coming back down. So this is going into a flat, it looks like, or a double 3. So either we'll have another ABC down or 5 waves down typically. And you would expect a more long and protracted correction. I mean, if this is a wave 1 up, then we're looking for a wave 2 down, or if this is a big A up, then we're looking for pretty big correction. So we did hit the 38.2 here. So we may come down to that 50 or 61.8. All right, so let me just connect the recent swings here. Basically, I'm looking for a median line, upper median line. So we have a series of lower lows, lower highs. We didn't quite take out this high. We have what looks like an ABC back up, and we're starting to work back down. So this is probably a 1, 2. So just looking at the market structure. We haven't quite come back to that upper median line, and that's where I would like to get short from, obviously. But I am, yeah, we're already through that trend line. Let's see if we have anything else. I'm not going to allow any of that. Yeah, I'll just connect the recent swing high to the final swing high and see if that gives us anything. Yeah, that one's even higher. So let's check out the tick chart. All right, so we're probably through that one. We're not even close to that one, so let's see. All right, I'll tell you what, I would have taken that on this bar because we're at the area. We're not quite at the area on the 5 minute, but let's just see if it doesn't line up perfectly on the 2 minute, or sorry, the 1 minute and the 300 tick. Yeah, it's already kind of through that trend line, isn't it? Might have been a little leery, a little leery of this one, but we are at the top of this channel. So yeah, I'll go ahead and mark that up. We have a churn bar, we got a buying climax, and then a churn bar. These are the types of little corrections that I'm talking about, wanting to test and allow, whoops. Bear with me for a second here. See how we can scroll bar by bar now with that little chart sync function. It's pretty nice for this exact purpose. All right. So there's our churn bar. Got high volume per, extreme volume per second on the previous bar. And then there we are. So fairly decent overthrow of that area. All right, so I will enter right there. At the high of this bar, well, we'll say at the close of this bar, 63, and then I'll put it just behind this high. And there's my first target coming off, and I'm simply going to trade down to below this low, and that's it. All right, and now we scroll forward. Okay, so that's looking like the better place to have entered, but anyway, my stop was behind that swing high, and there I just got filled on my second target. So what size stop was that? 63. It was a 5 tick stop. So not exactly a very big stop, but that's the luxury of trading these smaller corrections. Your areas are tighter, and you can get away with a little bit smaller stop. Bruce is saying, Daniel, please consider a bundle of the backtest, which I just purchased in your Volume Pro. The thing about that, Kent, or sorry, Bruce, the Volume Pro is not done yet. So currently we have the relative volume, the relative indicators, and then the volume and range indicators. This volume, probably going to have to name it something else because it's so much more than just volume. It's volume, it's relative density, it's range, it's relative range. See the input here? Volume, relative density, true relative density, volume per second. So we've combined everything into one add-on, and it will display both the volume and the density together on one sub panel. And then we're actually going to link I think, the volume per second together with the volume for the tick charts to combine the signals. So it's pretty amazing. We're still testing it now, and it'll be available by June 22nd, but probably not, maybe a week before that. So, but definitely available by June 22nd. So what I'm going to do now, I'm going to stop for just a second. Adrian and I will field your questions for a minute.
Hey guys, this is Adrian. All right, so basically what I wanted to go over was one of the other questions that I think Samir had. If he could use the stop to break even in the static mode, can you just switch, Daniel, please?
Sure.
The static mode. So basically, it's the same principle as the other, as the dynamic mode. It's in the number of positions. If you've got 2 or 3, you can move. If you can have either 1, 2, or 3, and according to how many number of positions you choose, when you go to your target to move the stop loss to break even, you can choose from a number of ticks in favor to target 1 and target 2. Since you've only got 2, you can either do a number of ticks or target 1, or don't move it at all. What this manual backtesting expert is also good for is, even if you do have a mechanical testing, even if you do have a mechanical system, we actually tested some mechanical systems for some people, and we ended up getting a performance of somewhere around a trade a minute, which which is actually pretty fast. And you can hammer down 200 trades in 3 hours, and then you can see pretty close if that system is going to work further on, or if it's just if it's just a dud.
Right.
200 trades is quite a lot of trades.
So figure out whether it's worth it, and if it's not, just scrap it and move on.
Well, some of them had a whole bunch of different indicators that they wanted to put in on the chart, and it would have been somewhere around to 20, 25 hours of programming, and you just got it sorted in 3 hours, and that's it.
Right.
A lot cheaper for the client as well.
Yeah, absolutely. Jim's asking about Ninja 8.
Yes, it does include a Ninja 8 update. That's going to come later on. The NinjaTrader 8 update is going to come with an update for MetaTrader as well, and it's going to become a standalone program. Since you've already purchased now, you're going to get the free update, but the price is going to increase once the standalone program is released. Right. The standalone program is going to have charting capabilities, graph drawing capabilities. So you're going to get the same amount of information that you get from NinjaTrader's, even if not more, from NinjaTrader's account performance.
Yeah, Samir, he just meant that somebody had commissioned him to automate their mechanical system. But before he did that, he took their rules, used the manual backtester, and plotted about 100 trades quickly just to see if it was feasible or not. And, quickly found out that it wasn't even worth trying to automate it. So basically saving them, all the cost of however long it would have taken, maybe 50 to 100 hours to automate some mechanical system or something. So just using the manual backtester to save all that programming cost. So kind of use the manual backtester to go ahead and vet, whether your system is mechanical or discretionary, vet the system manually. And then if it's, if it seems like it's feasible, it actually has the potential to make money, then you can spend more time and money on trying to automate it. Yeah, exactly.
I mean, if the client did come to us and, he definitely still wanted the system complete, we would have done it. No problems. It's just, this is your performance report.
Right.
I think that's about it. Do you guys have any other questions that you would like answered? Oh, let me scroll up.
Yeah, if you asked one, go ahead and ask it
Is there
again.
any? Is it the ZB question, the bond question?
Is there a way you can report?
Yes.
On
All right. Basically, we did it standard. We did the decimals standard for everything. Since you can trade with this forex, futures, and bonds, it would have been a complex thing to start to differentiate in between them. So we just stuck to the decimals for the moment. When we do updates and if we see that it's completely necessary, we'll definitely make that in one of the updates. As you will be able to see, we do quite regular updates, somewhere around 3 months or so at lowest. Yeah, we probably could. Any other questions? Exporting to Excel.
Christian was asking, why don't I just use, market replay instead? Well, because I'm wanting to get through as many days as quickly as I can. Market replay, when you have several charts and, some fairly heavy, not too heavy, but fairly heavy indicators, market replay doesn't exactly run very fast. And if I'm only wanting to trade, 2, maybe 3 to 4 hours per day, then I just want to go through those 2 or 3 hours per day and then move on to the next day. Doing that market replay can be pretty brutal in my experience.
Tedious.
Yeah.
And also, it's another thing with the market replay, for example. At the end of the day, you're doing testing just today, for example. You want to do a month of testing today. You get it done, and let's say market replay works, quick, fast, which it doesn't, but it works. What you can do is, with the manual backtesting expert, you can go back and re-see your trades at any time. So for a week from now, if you decide to go back through your system and have a look at your trades and see what trades you took with this system, they're still going to be there. With the market replay, they're not.
Right. And you can do multiple tests at the same time. So that's what I was showing when I first started here. I can flip from one to the other. So if I had, if I wanted to test my larger kind of swing trade type system while I'm testing this faster day trade kind of trend trade system, I can just flip from one to the other and be marking up both of them as I move through bar by bar. Something you can't really do in market replay.
And plus, there are a lot more statistics that we do, and we're going to keep adding to the statistics. NinjaTrader seem to have just, stopped at that.
Yeah, they
trading. Sorry, go ahead.
Do it very well. And see, Adrian's doing it. Ninja, I was saying this at the beginning, Ninja logs each individual contract as a separate trade. So if I'm, scaling into a trade and I'm getting into one here and then another one a little bit lower for a long, it's going to treat every single contract as an independent trade if I'm getting in one contract at a time. So Adrian has split up, what are your metrics on position number 1? So you can go back and say, well, if I seem to be making money on my first position consistently, but position number 2 is, not really doing so well, well, then you can go back and change your system a little bit to fit that. So maybe, you don't need to be looking for as large of a target for target 2. And you tend to do better just getting kind of all in, all out at that first target. So then you can use that information and go back and, try to make your trading system that much better. So the way that he's splitting these up is the right way to do it. Ninja's not doing this.
Well, the basic idea is there. It's just, it's always better to have something better. And also we're going to put in we actually just bumped our heads on this as well. For the position 2 and for everything is going to be, we're going to do a break-even trade as well. So for example, if if it hits your target 1 and then goes back and takes your stop 2 for break-even, you're going to have a number of break-even trades because right now they're calculated as winning trades when essentially they're not. They're just break-even. They're not losers. They're not winners. They're just somewhere there. So we're going to split them up and actually have them as a number of trades so that you can calculate it a lot easier. I saw that Bruce asked if we could export to TJS journal software. We can contact them and we can see what deal we can strike up with them. But yeah, we'll try.
Yeah. Does it export like Ninja would typically export it?
Yes, it exports it to a CSV file.
Okay.
And that CSV file can be opened up with Excel, and then it can be transferred into .xls. Or
yeah.
Excel.
Then that trading journal spreadsheet they already have a Ninja Trader kind of thing. Basically, you can take, the one that Ninja exports from their account performance, and you can import that right into that journaling spreadsheet. So yours probably go right in there automatically.
Maybe because the trade spreadsheet, the Excel spreadsheet for the trades looks exactly the same as your trade summary tab, the individual trades tab. So this way, yep, that one. So you might have to, select the columns and stuff like that.
Okay, yeah, then it will be a little bit different.
Mm-hmm.
Well, no, Ninja does that too, but I don't think they have these number 1, number 2. So yeah. Have to.
We can definitely look into it and maybe do like a special export. Yeah. So have like another button that you can export to TJS spreadsheet. Yeah. Francis, we haven't actually thought of that, but yeah, that's a good idea. We might add that into the next. Well, the list is getting long for the next update.
Yeah. Rob was wanting to walk through the file saving process. So basically, this is what I'm testing right now from May 1st. So I want to save this one. Yes. So I didn't switch to a new one. I just opened it and then clicked on the same one, but it's asking me if I want to save it. So I say, okay.
Either that, or even if you right click on the chart and go reload Ninja script, that saves it automatically. If you move your chart from a 5-minute to a 6-minute, it saves it automatically. Yeah. If you open up your indicators window and then you click OK or apply, it saves it automatically. If you open up your strategies window and you click OK, it saves it automatically. So it's got a lot of saving functions.
And if I want to start a new backtest, then I can say, whatever, CL. I don't know what, I just pressed the window button. Okay. So I can say CL May 17. Whoops. Forgot I had the hotkeys on. May 17. Start new backtest. See, I just clicked on start new backtest. Do I want to start a new backtest? Yes. Do I want to duplicate the trades? That means, do I want to bring these trades into this backtest, right?
Yes.
Okay, so I'll say no. Do I want to save that old backtest? Yes. Okay, so now if I start marking up the chart, it will be under this name, which you see here. But if I want to go back to that previous backtest, all I have to do is select it. Say the other one, yes. And there we are. See, that's my last trade that we took. So I can just go from one to the other.
This way you can test multiple signals and have them separate and have all the statistics separate for them.
Yeah, it's perfect. Jordy is asking, can we take a trade history of 20 trades with stop, move to break even, and then go back and test without moving the stop to break even. You might be able to do that in an Excel spreadsheet. You could go in and kind of work that out a little bit, right? But yeah, I don't think you would be able to do that automatically with this, because it's logging the trades how you log them. That would be something you would have to do in Excel. Do a static trade with multiple targets and make the stop loss move to break even after target 1 is hit. And then maybe Adrian can walk. You want to do that real quick, and then we'll call it a day. So static, multiple targets. I'll just say 2. And what else do you want to do?
Move the stop loss to break even after target 1.
Okay. So
make the trade lose the second target. So
make it lose. Okay.
Yep. So just enter somewhere. I think that wins both targets. Okay. Yeah. So how about you enter short like 5 bars before you did?
Okay.
So somewhere there. Oh, damn it. Really? Come on. You can't make a trade lose, can you?
All right. I'll do it right here. Short right there. So it hit the first one, right? Or did it?
Yep. It hit the first one, and then the second one got stopped out for break even. All right. Now, let's see the statistics.
And it's just going to show what the original stop was, right?
Yeah. So. Okay. So you first of all, you got the entry price. That's pretty much self-explanatory. It's been a short. A number of positions for position 1 is 1 and 2. Some people would like to see, they would like to get out 3 positions on the first trade, and 2 positions on the second, or whatever. That's why we put that in there. The stop price, then the stop loss if it was hit. Since it's not been hit, it's a 0. And 1R is 10 ticks. Now, the stop price for target 2, and if it's been hit, that would have put a negative in there somewhere, just in the next one, the stop loss. And the 1R is 20. Then you have the target price. Since the target is hit, it's going to say 10 ticks in profit. Then it's the R, what multiple of R that is. And in this case, it's a 1R multiple. If you look up further in Daniel's trades, he's got 4.4, 3.45, 3.47, and so on.
Yeah.
Then target 2 price. And if it's been hit, and since it was hit at 0, it's 0. And the R multiple is 0. It is a winning trade because you made 10 ticks on your first target. So that's why it's a win-loss. Actually, exit date and time, but that's kind of self-explanatory. Then you've got a win-loss if it's a win or a loss. And since, as I said, you hit your first target, it's a win. 1R total, which is 15. Yes. R multiple total, which is 0.5 because one target won, the other one lost. Trade P&L ticks, which is 10.
Yep.
And it's adding it to the cumulative profit, and that's in ticks. And then it multiplies it with the tick value, which is, depending on whatever you're trading for the crude oil, is $10. But if you're trading the ES, it's going to multiply it with a 12.50. Maximum adverse excursion is how many ticks did the market go against you while you were in the trade, maximum number. And maximum favorable excursion is the maximum ticks that the market went in your favor while you were in the trade.
Yeah.
Bars in trade is the number of bars in trade, and then if you want to delete or not the trade itself.
Yeah. He's probably having.
Did that explain it properly, or do you have any other questions about it, Samir?
I think you would call it a full win, right?
Sorry, can you?
He's asking. So the first target was a winner, but the second target was stopped out at break even. So you would
Yes.
count that as a.
We still count it as a winner right now, but we're gonna make it so that it's counted as a break-even trade. So if you go to a summary or position, go to position 2 summary, please. So in this one, where you've got number of winning trades in the third clump of things, number of winning trades, number of losing trades, and right underneath that, it's going to be number of break-even trades, because it is a break-even. Right now, we do count it as a winning trade.
As Ninja would.
Some people say that if it didn't hit my if I didn't lose any money, it's a winning trade. So most people count it as a break-even trade as a winning trade. That's why we went on that premise first of all.
Mm-hmm. Make those stats look real nice.
Yeah, exactly.
Yeah, that'll be a nice feature.
Sorry? Yeah, that would be.
Yeah. I like that a lot. Can you add the duration of the trade? Yeah, he's got total number of bars.
And we have with the entry date and time with the exit date and time. Yeah. You're saying the time and trade? Bruce?
That would be one more little column. That'd be nice.
Okay. Another thing to add on to it.
Total number of hours and minutes or something.
Mm-hmm.
Just do it like that. Yeah. Okay, cool.
In trade. And what was I going to say? We already have average time in trade in the summaries tab, but yeah, we don't have it specific.
Right. And just real quick, Adrian's also going to be adding a kind of pause functionality. So for instance, for me, when I'm marking up these trades, let me go a little bit further here. So what I was wanting to be able to do was, if I get into a short right here, let's say, be able to put the trade on, enter it here, put the stop in. If I want to take that first target off at a fixed R multiple, fine, but then be able to hit like a pause button, then mark up the chart, scroll forward a little bit, unpause it, and then if I see, a big churn bar or it moves too far back in the opposite direction, I could then click on that second target and exit the trade, or if it's pulling against me or something, get out a little bit early before the stop is hit, or once I see certain price action or volume, or reach that next channel. So that'll be a nice little function. Was there anything else you wanted to talk about, maybe that you were going to add, or?
I see that Bruce has got another question. Can you do a backtest series, one that set the rules and modify the rules by dragging the target or another simple move? No, that functionality is not in it yet. It will be when we do the move to NinjaTrader 8. It's going to be extensive, and it takes a lot of programming to get that done. And I see Geordie's got a question as well. What about adding best scale out stat? If you have 2 contracts, best scale out would be the percentage of time I hit target 1. I think we touched on this with the position 1 and position 2 separate profit and target loss, if I'm not mistaken. That way that's why we split those up, so you can see, your target 1 was hit 90% of the time, while your target 2 was hit X% of the time. In the cases where you move your stop loss to break even, you're not going to see a difference. But if you leave your target out there, you will see a difference in the percentage that it is profitable.
Is that, you learned that from somewhere, Jordy? Is that like a Van Tharp thing or something? I see that you named it BSO, so somebody must have FT71, huh? Yeah, I'll look into that a little bit further. Maybe it's just a simple way of comparing the two and spitting out a number.
Mm-hmm. If it's another statistics, then we can definitely add it.
Yeah.
The way I see this, the more you add, the more you can help more people out.
Right. The more info you have, if you can't measure it, you can't improve it, right? That's it. Can you delete from the chart? You can delete them from here.
From the trades tab, and then it sums them automatically.
Yeah. So if I want to delete this one here, well, let me scroll forward first. Current trade is short. Oh, I accidentally clicked on it twice here. Hang on a second. Let me just do this. Okay, so if I want to delete that one, I just click on the statistics. That was this latest trade here. Delete it, yes, and then okay, and it's gone. If I want to delete that one as well, which I do, then I just delete it here. Okay, and it's gone.
Also, there's one other thing that I omitted to, I kind of skipped over. I don't see them anymore, but if you go to your show statistics window, you've got the the second tool. Sorry, no, on the first tab, the second column is the tool column. Yeah. And then you can see that you've got the dynamic and static.
Okay.
Okay, what the hell's with that one?
I deleted the static ones.
Okay, but that one's not right. Can you delete the first trade? Because it's not in with any tools, and I think, how did that get added up there?
I probably messed it up when I was clicking all this stuff. Okay, there we go. What is the date there? 5/1. Yeah, this is the first trade anyway, 5/1.
Mm-hmm.
So yeah, so the D for dynamic, if I change it to static, let's say I get in short, open it back up, and there it's static. S for static.
And also, if you want to, sort your trades out to see which was the highest profit and loss, if you just click on the column head, and it sorts them in ascending or descending order.
Nice. Perfect.
Yep. And if you want to, order them up again, just go back to trade number and just order them like that. Yeah.
Nice.
Any other questions?
So I'd have R 4.1 instead of 3.5. From that statistic, Jordy? Yeah. I see what you mean. Yeah, I'll look into that. All right, guys, did we miss anything? I was thinking I would keep going, but it's already at, what is it, 2.5 hours or hour and a half?
I have no idea. I think it's an hour and a half.
It's pretty late for you anyway, huh?
Well, it's only 1 o'clock at night, but I'm used to working into the wee hours of the morning.
I bet. 1 in the morning. Oof. All right, let me just see if I've missed anything, and if I did, just type it again. Yeah, Bruce, I'll definitely do that. And then when there's an update, we'll do another training session for the new one.
You're very welcome, Geordie, and thanks for having me, guys, and Daniel as well.
Yep, our pleasure. All right, thanks, Adrian. Thanks, you guys, for showing up. If you have any questions, you can email us, support@tradetheplan.com, and then Adrian, what is yours?
Support@experttradingprogrammers.com.
For trading programmer.
It's double T. It's expert trading.
Oh, sorry.
Yeah, that's all right.
Whoops.
It happens to most people because it's a double T and they forget to double click it.
All right. Okay, and I'll put that in the chat. Okay, and let me show you guys real quick. I forgot to the main thing. This is the web page where you can access this 10% discount, which is closing tonight
at 11:59.
Yep. So we'll be done with the 10% discount, and that will never happen again. So for one license, $197 with the discount. I think it's $177.
I think.
And then
so.
for 2 licenses, $297 with a 10% discount. You have to use the code 10OFF. So when I go here, for instance, for the 2 licenses, coupon code 10, capital O, lowercase f, apply.
It looks like 100 off.
Yeah. So $267.30 for 2 licenses, and you can use PayPal or Stripe, which is any credit card. Okay, guys. And this will be over tonight, so if you want it with the free upgrades and updates, now is the time.
Exactly, come and get it. Bruce, we do have a way you can share this, but you will only be able to share the backtest with people that actually have the manual backtesting expert. But it doesn't auto adjust for the time. So if you're right now in the next update, it will auto adjust for the time. So if you're in central US time zone and you send it to someone in the eastern US time zone, these are going to be shifted by an hour or two, depending on your time differences. But we're going to make it auto adjust. So if you do send it to someone else, it auto adjusts so they will be able to see the trades that you have backtested on their charts.
Yeah,
and that's another feature. So grab it now if you want 10% off, because the features just keep coming.
Yeah, that's right. I forgot futures. Big Mike's forum. Forgot they do that. Yeah, it's pretty cool. Okay, good deal. All right, guys. Well, everybody have a wonderful evening. For those of you in the trading room, I'll talk to you tomorrow morning.
Have an awesome rest of your day, guys.
All right. Thanks, Adrian.
Appreciate it. You're very welcome. Thanks for having me.
Yes, sir. All right. Take care, everybody.
Bye-bye. Bye-bye.
All right. Bye.